Hi, this is Robert Kiyosaki, and you're listening to Capital Hacking. This is the most important thing you can listen to today.
He's the one.
I have a dream.
With great power comes great responsibility.
I could do this all day.
This is it. Don't get scared now.
They may take our lives, but they'll never take our freedom.
Cinderella's story out of nowhere.
It's in the hole. That the only thing we have to fear is fear itself.
Capital Hacking begins in 3, 2, 1.
Welcome back to The Big Show. Josh McCown here. John Edwin, welcome back.
What a fantastic show today, Josh. Man, we hit the ground running right after Thanksgiving. We got rid of that turkey stuffing, all those pies, baby. We're back in shape.
Yeah, and we got Victor Menasce with that elegant Canadian accent. But he is, so Victor Menasce and I ran into each other years ago at the real estate guys seminars on education and within real estate and how to properly follow all the rules and raise capital. And he was one of the speakers. And so we've hit it off for years. I think people are going to love this episode.
And you can tell he is such a teacher. Like, you will learn so much on this episode as I did. Let's go.
Yeah, and before we let me tease this out. What are you going to learn? You're going to learn his 7-point step to raise capital, which, by the way, most of us who are on the show, if we do deals, we always want to learn. 2, he's going to talk all about his business and how he does his work and what he's looking at into the future.
Let's go.
Time travel. This is what I was talking about, John. You get Victor Menasce on the show, and now you know you're a first class.
It is an honor. Victor, can you tell our listeners a little bit about yourself?
Oh my gosh. Well, I'll keep it short. I started my career actually as a microprocessor designer. I'm an electrical engineer by training, and spent a good chunk of my career in that space, rose through the ranks of both public and private companies, did 1 IPO, 5 M&A transactions, so held a number of executive roles in the semiconductor industry. And then 2009 came around and decided to make a little bit of a pivot into the world of real estate investing. There was something going on in the US, you might remember it. And it was a good time to learn, a good time to make mistakes, made plenty of them. But the market conditions allowed me to wallpaper over a lot of those mistakes because it was such an extraordinary time to buy. If I was to do it again, I would do it differently, obviously, with all of that learning. And today, one of the partners at Y Street Capital, a development company based out of Salt Lake City and Ottawa, Canada, which is where I reside. And we're active right now in 9 states across the U.S. and 2 provinces in Canada. Almost all new construction, everything from apartments to senior housing, flex industrial, land, a bunch of different asset classes across 9 states.
It's exciting.
What comes to mind right away, I know, Josh, you're chomping, you're ready to roll, but you said 2009 was a great time to get into real estate. You said you would do it differently. So how did you start in 2009?
That's a good idea.
What would you have done different?
Oh my goodness, it's embarrassing. I started at the bottom. Having been an executive in public companies, I knew how to lead teams. I knew how to raise capital. I knew how to operate in that realm. And I started at the bottom, flipping houses in Chicago and in Florida and in Phoenix. It was ridiculous, and working with, frankly, a lot of the wrong people. And so I ended up wasting several years of my life just being around the wrong people. And as we all know, I mean, Josh, you're running a very successful operation. That doesn't happen without having the best people, because it can't just rest on your shoulders. These are scalable businesses, and they only scale with the best people. And this is no different. So I kind of had to relearn a lot of these processes, a lot of these things from scratch. And it was humbling. It was humbling.
And by the way, so some part of that journey is where we crisscross paths, but maybe a whole cycle later, we meet up at the Real Estate Guys, which was really still continues to be a great education-based. First, it's a podcast, but it's also a seminar series group, a lot of education. So when did you join forces with them and become a speaker? I met you on stage at that. You were sharing your magnetic capital principles, which is a cool book you wrote. I would love for you to share that. But yeah, what was your journey to work with them?
So I'll tell you, it's funny because I met Robert Helms through a mutual friend, and we were supposed to get together for dinner and never could get it scheduled. So I said, all right, screw it. I'll fly down to Dallas and have dinner. And it happened to be right on top of one of their syndication seminars. So we had dinner with Robert and Russ and the whole gang. And I really knew very little about them. They said, well, I've got this radio show. So I said, well, maybe I can get you a few good guests. So
Oh, okay.
That's how it started. And the first good guest I introduced them to was George Ross.
Well, hold on. You got to tell John who George Ross is. He may not know. I know who that is, but only because you shared so much about him. I now know who he is.
Hey, everybody, it's Robert Helms, host of the Real Estate Guys radio program. And when you're not listening to our show, make sure you're tuned to Capital Hacking. You're going to dig it.
Yeah. So George is a lawyer. He works in New York City. He's currently 98 years of age.
Unbelievable.
He's retired. And he worked for Mr. Trump for 47 years, including doing the very first deal with Donald when Donald was 27 years old. Now, he's not a Donald fan, and we're not here to discuss politics, but he's the guy that I would personally credit with having saved the Trump organization more than once. And he's just a brilliant individual. He was responsible for 40 Wall Street and putting together a lot of the deals around the Grand Hyatt, the very first project. I mean, he's just been brilliant.
And he showed up on the show too, didn't he? 20 years ago, he showed up on The Apprentice as
he was on The Apprentice, yeah.
Councilman.
Yeah. He was on The Apprentice. And I developed a relationship with George. We've been running a mastermind now, close to 15 years. So back in 2010 is when I first met George. And we've been meeting monthly now for all of that time. In fact, we were supposed to meet this past week, and he's got a little bit of heart issues. So he's actually in hospital at the moment, but hoping he's going to be okay. And just an extraordinary individual. So the very first face-to-face, I guess the second introduction with Robert and Russ, the real estate guys, was at George's house. We said, all right, let's do a radio interview. So we covered the living room of George's house with cables and recorded a radio show in his house. And then I recorded a show with the real estate guys. And it was in that show that my business coach at the time listened to the interview, and he said, Victor, you've got a book in that interview. And I said, yeah, but I'm working on another one. He said, no, you have to write this one. That was the genesis of the book Magnetic Capital, was that one interview. So then at that particular session, I said, George, let's do an event together in New York. We'll do it at the Grand Hyatt, and we'll call it the New York Real Estate Summit. And George said, sure, no problem. So then I said, all right, let's get the book done for that event. So I wrote the book in 6 weeks for that specific event, and then edited it and made it better and so on. But it was really the process of raising money that I learned in the tech industry and then rediscovered when I moved into the world of real estate investing. Discovered it was exactly the same. And a lot of those principles, when they are adhered to, makes capital raising a whole lot easier. And if some of those principles are missing, it gets harder in a hurry.
Well, since John and I are always students here, and I've gotten to have you on the show maybe once before, John, maybe twice. Would you mind sharing the salient point of Magnetic Capital?
Sure. So there's really 5 principles. And when those principles are in place, raising capital is a whole lot easier. So it starts with a relationship. People don't invest with folks that they don't have a relationship with. Number 2 is trust. And that's a layered psychological contract with a lot of nuance to it. Next is, what's your track record? Show me your results. Number 4 is, do you have a compelling opportunity? And that's where most people start, but it's almost never about the deal. That really comes much, much later in the process. And then the 5th, and this is what cements it all together, is what I call alignment, which is, what are the goals for the money and what are the goals for the project? And do they match? If that alignment isn't there, it's not going to work. So we're talking about, what's the size of the deal? What's the term of the deal? What's the rate of return? What's the risk? What's the tax consequence? What's the control structure? All of these different things, like a dozen of them. And if that match isn't there, it's like the fit of a pair of shoes. If they don't fit, you're not a buyer. It doesn't matter how deeply discounted or how beautiful they are. If that fit isn't there, it's going to be forced and it's not going to work. But that's the core.
And that's why I invested in accountable equity.
Well, yeah, I mean, there's those principles kind of permeated everything you and I did with that group and those seminars, and you spoke at a lot of them. This idea that it's a long-term commitment, and it's about sharing that alignment with those who invest, and not just about the deal. And we talk about that. I mean, gosh, John and I run a seminar called Learn and Grow, specifically where we say, don't worry about investing until you dig into what we're here to do, and just break bread, right? Because that's the old-fashioned break bread. Now, in your book, do you talk about that? I mean, that has been the beginning of relationship building, meaning sitting at the table, is every culture. Every culture talks about that.
100%. There's a book actually by Keith Ferrazzi called Never Eat Alone. There's an entire book dedicated just to that concept.
You trained him.
What?
Yeah, when he flew into Philly, he looked for the best trainer and hired me while he was here. I trained
So
him.
who is this person? Wait. Okay, that's another story. Teach me that story real quick. Who is that guy?
It's an orange book. Never Eat Alone. He hands me the book. He's like, oh, by the way, I'm an author. Because I didn't even know he was. His assistant reached out. Like, this is 15 years ago.
Yeah.
I
That's
was
a great
working.
book.
Yeah.
Oh, man. Okay, so Victor, you are here today. We have you on the big Capital Hacking Show, and I think you've already done what we needed you to do, which is to remind people about that combination of financial and human capital, and that's where magic happens. That's where magnetism happens. I often think, and I think you're great at this too, as far as building teams. We think about that, attracting that type of capital too, teammates and colleagues and partners. And so, talk to us a little bit about Y Street, letter Y, not a WHY, but a letter I Street partnership. So tell me about that. What is that group?
So we're developers. So like I said, we're based in both Salt Lake City and Ottawa, Canada. We're 6 partners and we're growing. We have a number of employees. Our average daily staff meeting is between 11 and 13 people. We have a handful of interns as well. And when I say interns, I'm not talking, new college grads. I'm talking folks that run other businesses that really want to learn development. And that's today we've got a bunch of different projects, multifamily apartments. We've got, a bunch of units under construction. And it's, one of those, we love what we do. We love building assets that really people want to call home. It's really about community building. And that's the key. And I think over the last couple of years, there's been a lot of shifts in the marketplace.
So real quick, sorry to interrupt you here, Victor, but what you just described about how you said you have some interns, but they're not 18-year-old, 22-year-old. They're adults. You know what? I feel like you and I could coin this phrase right now, the group of us. I call that wealth internships. And it's not a job internship at 22 where you haven't done marketing yet. We're going to give you a marketing internship. It's more like a transformation of your human capital from the doing you've been doing to the wealth you can add value to. So you employ that. So you have a few successful professionals that join forces with you.
100%.
And then if you could pick back up from that and tell us a little more about Y Street, where you were in the great conversation flow there.
Yeah, so we're developers. We're active in multiple different asset classes. We're building apartments. Right now, we have a 102-unit apartment complex that's in construction. We should start to turn over some of the first of those units in about a week. And that's resort, workforce housing. A lot of resorts suffer from a shortage of housing. If you're paying $400 a night, no problem. Right? Lots of places to stay. And so it's an acute need. This one happens to be at Mont Tremblant, but there's others in the pipeline. We have a bunch of apartment projects. We like a particular segment called active adult, which fills a gap between your traditional market rate apartment and senior housing. So if you think about independent living, assisted living, memory care, skilled nursing, think about that progression.
Sure.
It's a big jump from market rate to independent living. You might go from $2,000 a month to $4,500 a month. And is there a gap filler product that could be a small premium to market rate and offer some of the services that people are looking for without it being an old folks home? Be a discount to independent living. Often the tenure in this space is quite long. It's about 9 years. There's not a ton of it in the country. It's only about 73,000 units in the country as a total, which is a drop in the bucket. And it's filling a need in the marketplace. So we're active in that space. We're very active in industrial storage. We certainly see that as an area that has definitely, it's a growing area. It's still a small percentage of the total. And we do a lot of land development. We've got several thousand acres of land under development, everything from residential subdivisions, master plan communities, and so on. So that's another.
You went after the tough stuff, I'll tell you. I mean, and when you say industrial storage, are we talking about an HVAC company parking their trucks and using a garage? What is industrial storage? Forgive me.
Hi, this is Melanie McCallan. Josh and I are just so grateful for the many investors who have already joined us at Accountable Equity. Accountable Equity is so much more than a capital group. It's really a community of accredited investors that want to learn and grow together. I just want to personally invite you, if you want to find out more about this type of investment and see if it's right for you and your family, please visit us at accountableequity.com.
Hey, it's Hal Elrod, author of The Miracle Morning, and you're listening to Capital Hacking. Enjoy.
It can be a number of things. It can be just fenced storage yards. For example, you think about boat and RV storage is almost the same product, but not quite. It can be that, but it's really for contractors. If you want to buy, I don't know, decking material by the truckload to save 15-20%, you need a place to store it. You're not going to go rent a warehouse for that. It can handle the colder temperatures or the weather. Just need outdoor space for that. If you've got equipment, backhoes, bobcats, bulldozers, you're not parking that in your laneway. Your HOA won't allow that. So you need a place that's secure for that, for these multi-million-dollar pieces of equipment, so that they're secure. There's security cameras. You can, as a tenant, go on the app and actually check on your equipment, make sure it's secure. Power in each particular storage location. So if you've got a trailer full of Milwaukee or DeWalt battery powered stuff, you can just plug in your trailer and charge stuff overnight. You don't have to take it all home. There's a whole bunch of different things.
No, that makes a lot of sense. And it's a premium, and it's not the exact same structures that we see with like a normal self-storage. You're saying those don't, it's not necessarily that. It could be a fenced yard, or it probably has some of those storage units, I imagine.
Absolutely. Yeah. And many of these are paired with warehouse space for sure. So that's absolutely part of the product offer.
You'll have to teach us that at another time. I want to keep hitting you with all your expertise.
Well, let me jump in real quick, because Victor, you mentioned a lot of different spaces in real estate and development, industrial storage. I love the term active adult. That's a great term. What do you see as the most lucrative or the most exciting space that you're in?
We're very excited about industrial and flex industrial in particular. There's not a lot of it that's been built in the country over the last little bit. There's been a lot of industrial, like big box industrial, that's been built, and that in some markets is frankly oversupplied. But there's absolutely a need for those smaller businesses, So that's very much an up and coming segment for us, anyway.
So with all that great background, and we'll have to have a show on the active adult, because that's a whole thing we could dig into. Would you mind sharing a little bit about how your highly ranked podcast fits into your ecosystem? And for those listening today, you're probably going to want to also subscribe to the Real Estate Espresso podcast. Did I say that correctly?
Yeah, absolutely.
I love it. I'm a guest on it sometimes, but it has a 7-day cycle, and you do it in a very creative way.
Great name.
Yeah, the show's is doing well. We're almost 2,900 episodes. So it's a daily show, 7 days a week. The weekday edition are solo episodes, just me. Short form podcast, 5 to 6 minutes, usually on something that's topical. Maybe it's a tie into the news, a lot of evergreen content as well. And then the weekend edition are interviews with notable people from the world of investing, including Josh and many others. And so it's really about providing a platform for what I call educational marketing. I mean, the reason we do this is to connect with the outside world, and people don't want to be sold. They don't want a sales pitch, but they are willing to be educated. And that's what we do. Now, a lot of the podcasts out there in the real estate space, frankly, are targeting the rookie audience. And to me, that doesn't make sense, at least not for us. So we're targeting the more sophisticated investor, folks who have already developed portfolios. We're not telling them, a passive income is good or any of these, beginner concepts. We're talking about, what's really working. What's the difference between cap rate and yield on cost, and why is that spread so important? It's not just the interest rate. We're getting deeper into what really matters, and we're looking at things the way institutional investors would look at things. So, in fact, many of our guests are institutional investors, fund managers, folks like that.
So with that, I think you also do some events that you own, an annual goals retreat, I believe.
Yep.
And is that the only, and what brand do you use? Is it the podcast brand? Is it Y Street? Who facilitates that brand, Victor? And what is that event you do each year?
So we're just back from that. We just held it this year in Tulum, Mexico. It's called the Build to Scale Mastermind. And the year before that, it was actually on a cruise ship out of New York. These are small events. They're, I'd say, similar conceptually to what you're doing, Josh,
right,
with your events, where you really get to spend some quality time together over several days. There's a social aspect to it where you really get to build relationships, but it's about attracting very high quality people. We've had producers of some of the top Broadway musicals. We've had investors who own thousands of units of apartments. This year we had an NFL football player who's been in 3 Super Bowls. We're really attracting very high quality
Amazing.
people. And when you do, that's where the magic happens. If you're sitting behind your desk looking to AI for answers, you're missing it.
Hey guys, it's John Vroman, founder of Front Row Dads, and you're listening to Capital Hacking, the best investment you'll make today.
You might get good answers, but you're not going to make a deal by getting the answers. Deals happen around the table and in a room, I think.
That's right. I always say the secret sauce behind a great mastermind is in the connections and the relationships built. It's awesome to have great speakers. The last event I was at, Dr. Ben Hardy was the closing. He was phenomenal. We had dinner together, but the more important, the lasting stuff are those connections that you build.
Especially, sometimes you share the war stories. Oh, this didn't work out. This did. And it always gets to this point, and this is back to John. This is why I'm so passionate about the title, Human Capital Meeting Financial Capital. It tends to get back to the human capital because you said it so well in Magnetic Capital. The deal is number 4 in a 7-point investigation. Does this match what I want to do with my money? Do I want to back the concept? Do I want to back the team? These things all come before the actual deal because deals are constructed by humans.
Well, they're constructed, but they're also everywhere. Honestly,
they're everywhere.
They really are. I mean, it's the all-you-can-eat buffet of opportunity. And folks who don't understand that just haven't experienced it, but it is absolutely true. So there's no angst around letting a deal go because there's another 5 right behind it. There's, if you go to an all-you-can-eat buffet, I'm sure you've been to 1 or 2 in your life, you can get indigestion in a hurry if you're not selective. Right.
But it's a funny story. There's one out here, by the way, you and I know the friends. Yeah. You probably even met the famous Smorgasbord of Lancaster. Right? That place, I could still talk about it just for one reason, John, the soft serve ice cream. So that's the secret, John. You and I should open up an all-you-can-eat buffet.
The secret is you drive an hour to Smorgasbord and
just get the ice cream. But Victor, thank you so much for sharing all of this. Before you go, you have thought about it every day. You have a podcast talking about it multiple days a week. Where will the economy be a year from now? Let's talk about the basics, like interest rates, since you study this every day. Where do you see that going from your research?
I think before we talk about that, we have to talk about where the economy is right now.
Please.
We are in recession. There's no doubt in my mind. The only reason we are not technically in recession is because we have about 2% of GDP going into capital investment, specifically in AI. If you subtract that out, that's capital investment. That's not day-to-day operations. That's futures. So if you subtract that out, we're in recession. That is 100% clear. You see it in the employment numbers. You see it in the people exiting the workforce. Of course, if you just look at demographics, the number of people exiting the workforce is going to exceed the number of people entering. And so that's what's pulling that quote unquote unemployment number down because people are exiting the workforce. But if you look at workforce participation in the country, it's falling. And you cannot have economic growth with a shrinking workforce. It's just not possible. The math doesn't support it. So I think ultimately, and you see it in other jurisdictions, central banks are recognizing this is happening. It's not just a U.S. phenomenon. It's happening in Europe. It's happening in Canada. This is a globally synchronized situation. And I think central banks are going to, and governments, it's not just monetary policy, it's fiscal policy as well, are increasingly going to be focused on stimulative measures as opposed to restrictive measures. Some will be quicker to get at it than others. I think the Fed is going to get there as well. We've seen it the last 2 rate cycles. I don't know what's going to happen in December. My guess right now would put it 50-50 at a further rate cut. But what matters more actually than what the Fed says is actually the bond market. The bond market sees more clearly because the Fed only sets one interest rate. They don't set, because there is no the interest rate. There are multiple interest rates, and they're a function of duration, a function of risk. All of these things go into setting an interest rate. So I look more to the bond market than anything else.
And with that, what do you see? Sorry, if you could, for us who are new to understanding all the things you study every day.
I look at the 5 and 10-year Treasury. So the question is, there's a ton of U.S. government debt. Most loans are indexed to one of 3 things: SOFR, secure overnight funds rate, the 5-year Treasury, or the 10-year Treasury, most permanent financing on the 10-year Treasury. So that's really what's going to determine interest rates for folks like you and I that are borrowing. that could go up depending on if there is demand for U.S. government bonds. I think one of the things that Secretary Bessent has done a good job of is creating a market, a domestic market for U.S. Treasuries. And believe it or not, it's these stable coins.
Really?
Yeah.
Okay. A stable coin meaning, remind us, define that, please.
So this is not about Bitcoin. This is about,
teach us.
Okay, so a Bitcoin is something that, first of all, what is money? Money is a means of exchange and a store of value. Bitcoin floats up and down. Ethereum floats up and down. That's not a store of value. Some people hope it is. Some people think it's an investment. It's not. It's a thing. I don't know. What a stable coin is it's a token that is indexed to something tangible, either the US dollar or it's backed by US dollars or US treasuries, increasingly US treasuries. So for folks that are setting up these exchanges where it's linked to the dollar, I mean, think about it. Right today, the US dollar is the global reserve currency. If Nigeria wants to sell oil to Italy, that's transacted in US dollars, even though the US is not party to the transaction. Does it have to flow through a bank, or could it flow through a stable coin? I think increasingly with the way that the US government is using the banking system as a weapon, if you don't do what the U.S. government wants, we'll cut you out of the SWIFT system, for example, things like that. Stable coins offer the potential for folks to transact in the equivalent of U.S. dollars without it having to flow through the banking system. And those stable coins, right? Those stable coins are backed either by dollars or treasuries, increasingly treasuries, because they offer yield where dollars don't.
Wow. I think we'll have to do another show on that too, John. That's too much to tap into right now.
Yeah, Victor.
So I think there will be demand. I think the international demand has evaporated. China doesn't want U.S. treasuries anymore. Saudi Arabia, not so much. Japan, not so much even. So a lot of that demand, international demand, is evaporating. So the question is, who is going to pick up that demand? If the demand isn't there, then yields have to go up. There's no two ways about it, which would mean rising interest rates. And that's what the bond market would say if there isn't demand for those bonds. I think they've done a good job of creating the conditions for that demand domestically.
Dang, drop the mic. Right, John?
Killed it. Now, where can our listeners follow up with you, Victor, if they have questions or they want to learn more about Y Street Capital?
YStreetCapital.com can certainly get in touch with us directly there. And of course, the Real Estate Espresso podcast, daily show 7 days a week. Love to have you as a listener. It's on all the different platforms, wherever you listen to podcasts. So great to connect that way as well.
Thank you, sir.
Thanks so much.
Till next time.
Damn straight. We just got
buddy.
We got to the end of another great show. And everyone listening right now, you're the family and friends. Thanks for staying till the end.
That was so fun. And hey, hit the like, hit subscribe. We're here to serve you guys. That's why we're doing this show. Josh is not paying me. I'm doing this off of my quote unquote sweat equity because we want to make a difference in your life. And then that ripple effect will continue to touch the world.
Hey, amen, brother. Please check us out on capitalhacking.com, all the social media threads. And yes, I know you've probably already sent this episode to one of your best friends. Thank you. We love you. Just go right into your iPhone, hit the plus symbol. We'll talk to you later. See you next week.
Share.